Hi, welcome along. We're going to do the second balance day adjustment that's required for Level 2 Accounting, NCEA, and that's going to be accrued income. So we're still dealing with the trial balance for Ron's Recyclers. This is the unadjusted trial balance. We've already done one adjustment, so we'll show that later on. But this time we're looking at this term deposit interest that we've got. We have a term deposit of $4,000, and at the moment we're showing interest earned on that as $100. Remember, these figures have got to reflect the income for this year, 31st of March 2017. So let's look at the adjustment that we're going to be required to make. The interest on the deposit is outstanding, so we're talking about 4% of 4,000. So we should actually be showing interest income of $160. Currently, remember, it was only recorded at $100. So this has got to be adjusted by adding $60 onto that interest income for it to be the correct figure for us to use in the accounts. $60 is the adjustment that's required. And remember, we have a rule that when we add information in there or increase anything on our trial balance, if we're adding information in there, we have to add that amount on both sides of the trial balance to keep the whole thing balanced and in sync. So we are going to have to add $60 of income on this side. So in turn we will have to add $60 on the other side, and we do that into a new account we open, and we call that accrued income. And basically it's income that is receivable, and so it's in the nature of a current asset, and this will be classified as such when we use it later on. It's just reflecting that as at balance sheet date we were owed 60 of the interest income that we have been showing. So let's go and have a look how that will reflect. And now this is our adjusted trial balance. The last video we had, we'd already done the accrued expense. This is the opposite way around. Our income now we've added to by 60 to get to the correct figure of 160. If we add 60 there, we've got to add 60 onto the other side, accrued income. So let's go and have a look at what they can ask you. Once you've done that adjustment on your trial balance, they can ask you to write the journal for that, and basically just follow the rules of what you've done on your trial balance, adjusting it. If I added 60 this side, that's on the credit side, so drop it down, and there it is on the credit side. Where did I add it to? Interest income account. I added 60 this side, debit side, so drop that down there. $60, where did I add it to? The accrued income account. Remember, your journal says what changes you've made, 60, 60, to what accounts, accrued income, interest. Basically, you're rewriting the adjustment you made to your trial balance. So let's go and have a look at what that looks like if you are going to have an exam paper. So that's our trial balance that you're working on. I've put through the adjustment, the 60 there and the 60 onto the interest income account. I'm now going to take my journal template that they've given me. I'm going to line that up there. The journal template only has 2 columns at the side there to match that and that, because that reflects what adjustments I've made to that T. Okay, and so there, 60, and that's on the debit side. Credit side, 60, and I drop that down there. I drop it down to another level because remember here I've got to have each line telling me why I've made those additions on the credit side and on the debit side. There, accrued income. There, onto the interest account, and I just copy exactly what they have written there if it's already an account that's already been opened, and the date 31st of the 3rd 17. So that will be my journal reflecting that adjustment for the income that was due. Let's just go back here, and I'm just going to now go on and look at how those things reflect to. That's just the animation for that. The general ledger account, therefore, general ledger basically is a little bit different from the journals. It's not interested in how you change these accounts. That's what the journal's about. This is basically telling me the story of what's gone on under one of those headings. So if they ask you to write a general ledger account for interest income in this case here, this is what you would end up with. You've got to tell the story of what's gone on in the box under that heading, interest income. So you started off with the balance. I already told you, $100. You know nothing about that. That's the information you start off with. You have added 60. Now we're talking on the credit side there. So I've added another 60 credits. Now I'm getting to 160 credits sitting there. Remember here, you put in that $60 credit. Just over here, you write the name where I'll find the opposing entry to that plus 60. In this case, accrued income. There it is. And remember, this is an income account. We measure it for a year and then we take that all down to 0 to start the next year. And we summarise all the income and all the expense accounts in one account, which is called the income summary account. So basically what I do here is I have to get this account down to 0 because it is an income account. And so I have to get rid of the 160 credits. How am I going to clear 160 credits out of this account? I put in the opposing ones there, 160 debits. That brings that balance down to 0, and those credits are effectively moved to the income summary account. The other thing there we've got, if you're interested, is the accrued income account. If you're asked just by chance, if you're asked to tell the story of what's gone on in that box there, basically there's no opening balance. You've just dumped 60 debits in there, and that's all that's happened. So it says, what have you done? Well, for the accrued income, therefore, 60, there's the accrued income. What have I done? I've dumped 60 debits in there. That's my balance, 60 debits. And just it says, well, if you dump those 60 debits there, where's the opposing 60 credits gone? And you write the name of the account there, interest income. So that doesn't get blocked off, remember, because accrued income, when am I going to receive that in? Next year, so it doesn't go down to 0. That just gets held over on the balance sheet in the balance sheet at the year end. So if it's got any implications for next year, it gets held over and doesn't get taken down to the income summary. Okay, hope that helps. On to the next one shortly.